Hey guys, DJ from PTA. Want to go over a few charts today. Had a decent day, light trading for me, simply because I just wasn't able to stay glued to the market. Had a lot of projects and things going on. So we're gonna go over the SPY, GOSS, as well as Twitter. I made a nice play off Twitter as well. So let's go over these numbers, kind of get over the key areas and parts so that you can kind of understand how I was looking at the market today. So first, as I always do, I go over the sentiment of the market. We had an update, even though we had inflation rose 9.1% in June, which was definitely higher than what they expected. But, as traders, fundamentals play a part, but technical analysis and just going with the flow of the market gives you a better idea of what's going on. I mean, I've seen stocks rise on bad news. I've seen stocks lose momentum on good news. So I play news, I play the part, but I really go off of price action and volume and see what things are stepping in. We're still in the downtrend. I don't see any fundamentals that make us think that it's going the opposite direction. So to me, the market is still down, and that's just what it is. So any of these green days is just simply, shorts taking profit and then reloading, in my opinion. So first stock I want to go over is GOSS. And now GOSS was put out there in the Discord as well as to our members. So our members knew about this prior to. So definitely need to subscribe, jump on there, get some information, jump in the Discord. There's a lot of people in there that give out great information, and we love to try to help as many as we can. So right here, this was a key area at 985. Now, why is that? Because it bounced and then it broke and then retest, and broke away. As you can see, this orange line is representing previous month high. Gray line is representing previous week high. Now you notice it's right around $9, so it might be a good area of $9 support or resistance in that area. Breaking it down a little bit more, this was a key area here. I'll probably would say rejected here. So we'll just call that 770. Yeah, let's make that 770. And then you can look at this as a key area as well, because you can see it rejected, and then it rejected and pulled away right there. So we'll put that as 865. Okay, so I don't really see anything else coming into the day I probably would have looked at, and everything else would probably be entry day. So let's break down to the 30-minute. Has some volume in the pre-market, not a lot per se, but definitely jumped up on the radar at this point, right over here once it got over that million mark in that first 30 minutes. So the move was really in this area here. So let's go down to the 5-minute, and the 865, knowing that was off a previous higher time frame support and resistance. 865 was a critical area. So right here, probably when it retest right here, was a really good area to get in. I end up getting a fill. Let me double check that for you guys. I believe I got a fill in at 869. About 869 is where I got filled in at right here, and we just had a nice rip, pulled up into the nines. I took a little bit off and I got wicked out right here on a break even, and then it went further and kept going. So now let's look at the 1 minute so it can make a little bit more sense to you. Let's see here. Actually, it was 871 was my order. So go here, 871 right there was my order. So when I got into the trade, it ripped. And me, 30 cent, 40 cent, where the market is, I'm not trying to go for gustos, especially when I only had a 5 or 6 cents risk and I get a 40-cent gain. I mean, you can do the math on that and know that that was a good risk to reward. So you talking about a 6 to 1, 6.6 to 1 R&R. Yeah, I'm taking that. So, we were breaking out, and then like the way I look at the chart from a higher time frame is I'm also looking at support and resistance. So when I seen the stock breakout, come back, and then repeat itself and hold off of a daily support or resistance, this is a key area you want to look at. So it formed your A here. And then let's look at the 15 minute because it's a little bit cleaner on there. And like I said, when you don't see it, just keep going out. I always tell traders, if you can't see the trend or you can't see the move, keep getting out. So right there was the trend line break into that. As you could see, it was pretty much holding this 846. It never closed below that area. So right here, when you had this big buying pressure coming in right here, and this is what people have to understand, is this is where it got interesting. So, in this area here, let's see something here. I'm trying to draw it so you can see the area right there. That was where all the buying pressure stepped in that area. So they stepped in here, came back, retest, got some more. So honestly, you probably could have looked at this from a couple viewpoints. Let's go to the 30 minute because you probably could see it very well off of there. Yeah, you can. So right here ultimately was your demand zone. And that's where everybody got in at based off that area. So when you break it further down into a 5 minute, you can actually see right in that area is where everybody got in at. Red to green transition, pulled over. Again, when you look at it from a higher standpoint, you can see that it never closed 846. So anywhere from a tight, hardcore risk of 846 and down is a good area where you would have got in at. So looking at it from this time frame, let me draw the line because that line doesn't show on there. 846 is market orange, so you guys can see it. So right there, bro, came back, retested, and kept going. So again, like when you look at this stuff from different time frames, the higher the time frame, the more you respected it. So this right here is where they all gathered at. Look at the close price, 848. The open price, 848. This was an indication that this is where they were stepping in at. They got exhausted. Buyer stepped in, took over, continued the trend. 871. Like I said, that 3-bar play I like to play, where we got the reversal, confirmation, and then the trend. And it kept going. Now, because I was sniping, it was more of a sniper trade. I took my 60 cent, whatever it was, real quick. I think it was about 30, 40 cents somewhere up here. I pulled some shares off there, and then it actually wicked out and came back and continued on. It actually ended up going to 969. So when you place a trade and you get in a trade, you got to know where your risk is. You got to know where your exit is. And in that case, I just played it as it is, So even if you looked at it from, let's take this off as well. Even if you looked at it from a extension aspect, you take it from your lowest point of the day to your highest point back down to this area. So right here where I got in at was, small risk, take it up to the 50%. You see how it wick, hit, and then get out. Play the lines. So as soon as it hit there, boom, I got out. Now you definitely could have sat there and played it in a longer trend. But again, the whole key is to make money, get in, get out. See a great opportunity, you get in, you get out. So the next stock I want to go over is Twtr. Now this is the one I made the most off of. Twtr was similar. It was bouncing, and I mean, let's look at it overall. The stock was down. So looking at it, it went from a 31.30, came back, kind of retested that same area again right there. So I knew that that was support here. So we'll just call that 32. So with that being 32 is the risk or area, I seen that it was bouncing. Now, one of the things I want you to look at is right here was a key area, and that was 35. We'll just call that 35.80. Okay, you see that it wicked and went back up. You got an area here. Let me put that just right for you guys right there. So we'll call that 40.50. 40.50. And then you had an area right here around 39.50, 39.51 right here, which is previous week high. So I'm gonna put it at 39.50, just so we can have a little bit of a separation to look at that, and then it faded. So this is like pretty much my key areas of interest when it came to the stock. So I was really looking at that 35.80. Now let's zoom down into a 30 minutes so you can kind of take a look at it. And as you can see, it never closed below that area on the 30 minute. Let's go down to the 5, and then it looks even more cleaner. So you had this big push and then a pop, and then it just kept going. So for me, I had an entry in at 36.41. So let's go here, 36.41. And I actually missed it because of timing. I didn't see it till late. So I'm still holding shares. 36.41, got in about right there. Now as you can see, pulling it off of the 15, you can see the area that I got in at and why. And it was right there because we saw this break. Remember, reversal, confirmation, break. So when I saw that coming into the 15, only area right here with some shorts, I saw that, I jumped in 36.41. I took some off about 37.08. Again, you got to look at my wrist. You know, my wrist was so small on this, it made all the sense in the world to do it. So when you find areas of interest on a break with a small wrist, literally my wrist was here. It's 20 cents. Cause see, when I saw this, and let me kind of draw that out. When I saw my wrist, it's being as small as it is, I loaded up. So you're talking about literally a small wrist. This is my entry right here. And here go my wrist. Now, why is that wrist? Look at the pattern. It went up, which formed A, dropped back down, formed the area of B, which this was B, and then it curled into C for the break. Now, that was more of a smaller ABC on top of another ABC on top of another ABC confluence. When you see multiple things happening at the same time, that's when you get confident. And that's where I got confident into the trade. And even if you look at it from a higher time frame, you can see it there. This being a higher, meaning more candles, longer time frame. This was A. Look at the bounce off support into, and then it developed new support here, which was B. Bounced off of support, pulled back, created C, and then into the break. So it just depends on how you visually see it. For me, that's how I see it, how I saw it. And it takes a while for your mind or brain to kind of see those areas as it. Some people draw a line like this to make it easier for them to see it. Try not to let it hit that area right there. So you might go extend to the right there. So this pretty much traded until it broke here. So it's 36.94. So again, when you only got 20-cent risk, and then you can easily make 70-cent gain, it's still a good 3 to 1, 3.5 to 1 type of trade. Those are the type of trades you want to take. When you can get 4 to 1, 3 to 1 R&R, you take those type of trades, because those are very good trades. So just to go over this one more time, show you what I was talking about. The risk to reward has to be there. You also have to visualize a chart. So let's go into this so I can kind of break it down from a higher standpoint of time frame. All right. So this is your 1 minute that we have here. All right. So remember, that was A. Right. We had a bounce, pull back, found support at B. Bounce, pull back, found support at C with a break. Now that's how it looks on a 1 minute. Now let's take it down to a 5 minute. It's the same pattern. So when you see the candles, sometimes you may have to pull out into a time frame so that you can actually see what's going on. Okay, cool. As you notice, there's always been a red to green move. What I mean by that is, here's your first red to green move, which is here. Pull back up, which formed your A. Now remember, this is your long-term A. So if we looked at it from that standpoint, that was your long-term A. Let's go back down to 15. That was your long-term A. Right here. Right here. See the green and red? Pull down. That's what this conjunction of information right here is, this right here. So let's go back down to the 5. And you can see this on different time frames. We'll even go to the 10 for a minute. On the 10 minute, you can see it. Same pattern. So sometimes you need to step out of the trade to see the pattern so it can be a little bit more cleaner. So this was A. This will be considered your long-term A, which was here. So the market, let's go to a custom pin. That was A, which is right here, right? So this created B, almost like a double support. So this was B, all this was B. Then you had a smaller A, right? That was your bounce, pull back. So sometimes you have to look for the smaller time frame ABC so you can get the right risk to reward from off of the break off the higher time frame, which was, again, it was breaking out of A. So when you look at it and you say, okay, I see that, this is the reason why it was pushing everyone from this point out of the trade. But you can see it from a smaller time frame, the ABCD pattern, and see it there. So it actually broke and then went higher. So this became like that. Whereas this right here, this pullback, this would have been, so that was A, B, pull up, C, and then D, which created a new A. But within that pattern, the one that you see here, which would have been A, B, C, and then D, you actually had a smaller A, B, C, and D. So when you can see the confluence of multiple time frames showing the same bit of information and find that sweet spot. I probably could have got in a little earlier, a little bit of risk, but I like to play it off of key areas. So my interest was always trying to be, well, where is the key area? What are we pushing out? I want to push out these shorts from a higher time frame. I want to get these people out of the way. So this is where you got this big major push into the stock going higher. And as I say, when you look at it from multiple time frames, you then can see the confluence, you can see it all adding up. And every stock, for the most part, work this way. You just have to wait for it. Wait till you see it set up. So when I look at this, it's just the way I see it, I guess, and looking at the chart. So this is kind of interesting. And as I said, sometimes timing and stuff like that plays a part, because I know a lot of traders probably looked at it and saw the ABC here and got in and then went and then slammed back. But that's the reason why you always go in and you have your risk to reward to take profit. You don't know exactly when it's going to start running, but if I got in right here at 20 with 20-cent risk, it went up to 60, which would have been a 3-to-1 get out. You're already up 3-to-1 on your trade. Take something off the table, put the rest at break even. As you see, it slammed and then turned around and did the same exact thing, but this time it was actually ready to go. So something to think about when you're looking at confluence and you're looking at multiple time frames to get the idea where that stock is going. All right, guys, if you like this video, go ahead and hit the like button. Also hit the subscribe button so you don't miss none of our videos. And hit that notification button so you don't miss anything. It'll alert you and let you know. It also helps with the algorithm to get this good information out to others. And as I always tell traders, guys, new or old, stay studying and stay focused.